Hey everyone, welcome back once again to our channel. And from today onwards, on a special request, I am starting a new series where I will be covering entire study material in a quick and a fastest manner, which will help you to revise the entire chapter in the shortest possible duration. So, without wasting much time, let's get back to the video. So, today we will be covering chapter 6, that is determination of national income, in which we will start from unit 1, that's national income accounting. So here is a chapter overview which determines its determination of national income, in which we have national income accounting, where we have different concepts of national income, then measurement of national income in India, and limitations and challenges of national income competition. So we will move forward with the 1.1, that is national income accounting. So national income accounting, pioneered by the Nobel Prize winner economist Simon Kuznets and Richard Stone, is the system of microeconomic accounts from the state of production of goods and service to the stage of their final disposal. Like any other accounting system, the national income first define concepts and then construct measures corresponding to these concepts. So national income helps us to understand how the various transactions from the stage of production of goods and service to the stage of final disposal are interrelated and give us an idea of a working of our economy. It helps us to meet the need of the government, private analyst, policymaker, and decision maker. The Central Statistical Organization (CSO) is in the Ministry of Statistics and Program Implementation (MOSPI) is the responsible for the compilation of national account statistics. At the state level, the state directorates of economics and statistics (DES) have the responsibility of compiling their state domestic product and aggregate. So you may consider it as important for this. Just a minute. Yes. Then we have usefulness and significance of national income accounting. So national income accounts are fundamental aggregate statistics in macroeconomic analysis and are extremely useful, especially for the emerging and transition economies. Uh, Businesses to forecast the future demand for their products. Just I'm marking it. Then we have the estimate of national income show the composition and structure of national income in terms of different sectors of the economy, their periodical variation in them, and the broad shift sectoral shift in an economy over time. So there is a change in economic overall. We can get analysis of them. Then we have sectoral contribution to national income information is used by the government to decide various state specific development policies to increase growth rates, means which sector are booming and which are not. So government will try to plan some policies which will help to boost the government various schemes or various sectors which are not in the boom currently, so they are growing at a slower rate. So various policy also have a positive impact on the growth rate of the sectors. Then we have national income statistics also provide a qualitative basis for microeconomic modeling and analysis, for assessing and choosing economic policy, and for objective statement as well as evaluation of government economic policies. National income estimates throw light on income distribution and the possible inequality in the distribution among different income categories. It facilitates the process of comparison of structural statistics such as ratio of investment to growth, tax proceeds, and fiscal deficit or government spending to GDP ratio. International comparison in respect of income and living standard assist in determining eligibility for loans and or other funds or conditions under which such loans and or funds are made available. Combined with financial and monetary data, national income provides a guide to make policy for growth and inflation. Then we have different concepts of national income. So we begin our discussion with the basic measure of output to GDP, gross domestic product, or GDP. The production side of the economy transforms input such as labor and capital into output GDP. Inputs such as labor, capital are called as factors of production. So this is one of the important thing, factors of production. And the payments made to the factors such as wages and interest payment are called factor payments. Then we have gross domestic product, that is in which we have nominal GDP or GDP at market price. So gross domestic product GDP is the value of all final goods and services produced in a country within a given period of time. It includes the value of goods produced such as houses and mobiles, and the value of service such as telecom, health, insurance, etc. The output of each of these value is value at market price, means current prices, and the value are added together to get GDP at market price. So nominal GDP or GDP at current price in Q1 2022-23, it's old data, is estimated to be rupees 64.95 lakh crores as against rupees 51.27 lakh crores in Q1 of last year, that is 2021-22, showing a growth of 26.7% as compared to 32.4% in quarter 1 2021-22. So it's old data. I will try to compile and add the new data in the upcoming videos with the help of additional notes. Then we have real GDP. So nominal GDP increases over time for two reasons. First, the production of most of the goods increases over time. Second, the price of goods also increases over time. So there is two things, production and price. Then we have if our goal is to measure production and its change over time, we need to eliminate the effect of increasing price on our measure of GDP. That's why real GDP is constructed as the sum of quantities of final goods time constant rather than current price. So this is at constant price. Please bear me for my raw handwriting or improper handwriting. So I am new to this new tab. So once I get used to it, you will see a lot of difference in the upcoming videos. Then we have a real GDP or gross domestic product GDP at constant. This is old data, so I think it's not more relevant. I will try to skip this part. Then we have one more important concept, GDP deflator. GDP deflator, the calculation of real GDP, gives us a useful measure of inflation, also known as GDP deflator. The GDP deflator is the ratio of nominal GDP. We just got the definition earlier. In a given year to real GDP. So real is without constant price, and this is at current price. Hope you are understanding or getting some of the concepts. So the formula is GDP deflator equals to nominal GDP divided by real GDP into multiplied by 100. So the GDP deflator, as the name implies, can be used to deflate or take inflation out of GDP numbers. So in other words, the GDP deflator is the price index used to convert nominal GDP to real GDP. So we can reverse the formula where we can get real GDP equals to nominal divided by GDP deflator. So the same formula is reversed, multiplied by 100. So the deflator measures the current level of prices relative to the price at the base year. Since nominal GDP and real GDP must be in the same base year, the deflator for the base year is always 100. So this is important. As you may know, inflation is a closely monitored aspect of macroeconomic performance and a significant variable guiding macroeconomic policy. Using the GDP deflator, the inflation rate between two consecutive years can be computed using the following procedures. So inflation rate in year 2 equals to GDP deflator in year 2 less GDP deflator in year 1 divided by the base year GDP deflator in year 1 multiplied by 100. So this is the simple formula. Hope you have practiced it earlier. Then we comes to GDP deflator in India is expected to reach 154.87 points by the year 2022 according to trading economic global macro models and analyst expectation. In the long run, the India deflator GDP deflator is projected to trend around 167.974 points in 2023 and 175.67 points in 2024 according to econometric models. Inflation rate in 2023 equals to this minus this multiplied by the base year into 100. So the inflation rate will be 8.439%. Similarly, we have a numeric example. I will just try to go through it in the fast manner. So we have here nominal GDP, real GDP and GDP deflator. So the question is find out the GDP deflator, interpret it. So a deflator above 100 means this indicates is indication of price level being higher as compared to base year. From the years 2015 to 2019, we find that price levels are higher than the base year. The highest being in the year 2016. This one, base year. Why 2016? You may guess it. This is because this is the highest one. If the GDP deflator is greater than 100, the nominal GDP is greater than real GDP. If the GDP deflator next year is less than the GDP deflator this year, the price level has fallen. If it is greater, price level have increased. Similarly, we have one more example, a simple calculation. We need to calculate GDP deflator and comment on the price level. So this is nominal GDP, this is real GDP. As usual, the formula is nominal divided by real multiplied by 100. So we get 63.83. So the price level has fallen since GDP deflator is less than 100. So more than 100, price will rise. Similarly, less than 100, price will fall. Hope you are my writing is easy to you. Similarly, we have one more thing. Just the same. This is the another formula. Nominal GDP equals to real GDP multiplied by price index divided by 100. So we have find the real nominal GDP if we have real and price index. So we will just twist the formula. Nominal equals to 450, that is real multiplied by price index divided by 100. So we will get 540. It's a easier one. Hope you also get some easy questions in the upcoming exam. Then we have, suppose nominal GNP of a country in 2010 is given at 600 crores and the price index is given at the base is 100. Now let the nominal GDP increase by to 1200 crores 2 times in 2018 and the price index rises to 150. What the real GDP? I think there is some data corrections. So ignoring the year, we will try to just calculate what is asked. Real GDP equals to nominal GDP multiplied by 100 divided by price index. So it's we have reversed the formula. So 1200, there is a multiply sign, multiplied by 100 divided by 110, we get 1090.9 crores. Then we comes to the next page where we can start. As you know, capital wears out or depreciates while it is being used to produce output. Net domestic product NDP is equal to GDP minus depreciation. So I hope you know what depreciation is. NDP thus comes closer to measuring the net amount of goods and services produced in a country in a given period of time. It is the total value of production minus the value of capital used up in producing that output. Other considerations such as asset obsolescence and complete destruction are also taken into account by the NDP. So mark this. You need to consider this also. If any asset has been destructed or any asset has been become older or obsolete, we have to take the same also. So here the formula comes is NDP at market price equals to GDP at market price less depreciation. As you are aware, the basis of distinction between gross and net is depreciation or consumption of fixed capital. So gross equals to net plus depreciation, or net equals to gross less depreciation. So this is a twisted formula. Then we have gross national product, GNP. So gross national product is a measure of the market value of all final economic goods and services produced within the domestic territory of a country by normal residents during accounting year, including net factor income from abroad. So accounting year, do you know what's accounting year? Please comment below. Then we have, it is the total income earned by a national permanent resident called nationals. It differs from GDP by including income that our citizens earn abroad. मतलब जो बाहर वाला income है वो भी include होता है, and exclude income that foreigners earn here. जो income बाहर जाने वाला इंडिया से उसको हम exclude करेंगे. Then we have profits earned by Apple from its Indian manufacturing operation is a part of Indian GDP. But these profits are a part of US's GNP. देखो डिफरेंस समझो, ये GDP का पार्ट तो है पर GNP का पार्ट नहीं है. Then we have gross national product, GNP is evaluated at market price and therefore it is the in fact gross national product at MP. समझे? दे उसका फॉर्मूला भी है, GNP at MP equals to GDP at MP plus factor income earned by the domestic factors, domestic of production employed in the rest of the world, out of India वाला सब, less factor income by the factors of production of the rest of the world employed in domestic territory, मतलब जो इंडिया में employed है. So मतलब फॉर्मूला हमने जो देखा अभी, GNP at MP equals to GDP at MP plus नेट फैक्टर इनकम फ्रॉम अब्रॉड. नेट मतलब जो आ रहा है वो जा रहा है उसका नेट. इसके नीचे और एक फॉर्मूला है, GDP एट MP इक्वल्स टू GNP एट MP लेस नेट फैक्टर इनकम फ्रॉम अब्रॉड. इसी को ट्विस्ट किया है यहाँ पे. GDP नेशनल JNP मतलब GDP प्लस है, उसी को रिवर्स किया, GDP मतलब GNP लेस है, इधर ऐड किया है इधर लेस किया है. So उसका डेफिनेशन दिया है, NFI है. NFI is the difference between the aggregate amount that is country citizen and companies earn abroad, जो बाहर कमाए, and the aggregate amount that the foreign citizens and overseas companies earn in that country. So उसका फॉर्मूला है NFI equals to net compensation of employees plus net income from property and entrepreneurship plus net retained earning, जो हमने रिटेन किया है. If net factor income from abroad is positive, then GNP at MP would be greater than GNP at MP, GDP at MP. अगर ये ज़्यादा रहा तो फिर obviously GDP से ज़्यादा आएगा. फिर है, you may have noticed that the distinction between national income and domestic is net factor income from abroad. इन दोनों का डिफरेंस का मेन कारण है NFI. सो नेशनल इक्वल्स टू डोमेस्टिक प्लस NFI, जो अभी हमने देखा. फिर आते हैं नेट नेशनल प्रोडक्ट एट मार्केट प्राइस, NNP एट MP. सो नेट नेशनल प्रोडक्ट एट मार्केट प्राइस, NNP एट MP is a measure of the market value of all final economic goods and services produced by normal resident within the domestic territory of a country, including net factor income from abroad during an accounting year, excluding depreciation. So NNP at MP equals to जो GNP हमने कैलकुलेट किया less depreciation, और NNP at MP equals to NDP net domestic product at market price plus यहाँ पे लेस था याद रखना, प्लस नेट फैक्टर इनकम फ्रॉम अब्रॉड. और इसी का और एक वर्जन है, NNP at MP equals to GDP at market price less net factor income from abroad less depreciation. So एक ही फॉर्मूला को हम तीन बार अलग अलग वे में लिख पा रहे हैं. फिर आते हैं 1.3.6 ग्रॉस डोमेस्टिक प्रोडक्ट एट फैक्टर कॉस्ट, GDP at FC. So, sorry, GDP gross domestic product at factor cost is GDP at market price less net direct taxes. ये क्या होता है अब देखेंगे हम. The money value of output produced within a country's domestic limit in a year as received by the factors of production is measured by GDP at factor cost. Thus, we find that the basis of distinction between market price and factor cost is net direct taxes. Net direct taxes मतलब क्या? Indirect tax जो है less subsidies. Subsidies यानी जो benefit हम दे रहे हैं, incentives जो दे रहे हैं. Subsidies मतलब बिजनेसमैन को उनको हम गवर्नमेंट प्रोवाइड करता है कुछ मनी पार्ट या कुछ मॉनेटरी पार्ट. सो मार्केट प्राइस इक्वल्स टू फैक्टर कॉस्ट प्लस नेट इंटरेस्ट नेट इनडायरेक्ट टैक्सेस. उसी को हमने वापस लिख के आए फैक्टर कॉस्ट प्लस इनडायरेक्ट टैक्स मतलब ये जो ग्रॉस था लेस सब्सिडीज जो अभी हमने बताया. सिमिलरली उसी को ट्विस्ट किया है फैक्टर कॉस्ट इक्वल्स टू मार्केट प्राइस लेस नेट इनडायरेक्ट टैक्सेस. और उसी को और एक तरीके से लिखा है मार्केट प्राइस लेस इनडायरेक्ट टैक्सेस लेस सब्सिडी प्लस सब्सिडीज. सो याद रखना ये ट्विस्ट आपको क्वेश्चन सॉल्व करने में हेल्प होगा. तो अब आते वही फॉर्मूला पे. सो ग्रॉस डोमेस्टिक प्रोडक्ट एट फैक्टर कॉस्ट FC इक्वल्स टू GDP एट मार्केट प्राइस लेस इनडायरेक्ट टैक्सेस प्लस सब्सिडीज. वो इक्वल्स टू है कंपेंसेशन टू एम्प्लॉयज प्लस ऑपरेटिंग सरप्लस मतलब जो सरप्लस आ रहा है उसका मतलब रेंट इंटरेस्ट प्रॉफिट प्लस मिक्स्ड इनकम ऑफ सेल्फ एम्प्लॉयड वाला इनकम प्लस डेप्रिसिएशन. फिर से एक बार ग्रॉस डोमेस्टिक प्रोडक्ट एट फैक्टर कॉस्ट GDP एट FC इक्वल्स टू GDP एट मार्केट प्राइस लेस इनडायरेक्ट टैक्सेस एंड प्लस मीन्स एड सब्सिडीज. वो इक्वल्स टू होता है कंपेंसेशन ऑफ एम्प्लॉयज plus operating surplus which includes rent, interest and profits plus mixed income of self-employed and plus depreciation. फिर आते एक ओल्ड डेटा है पर हमारे समझने के लिए अच्छा है. यहाँ पे एक GDP एट फैक्टर कॉस्ट का एक टेबल दिया है. आई होप आपको दिख पा रहा है हेडिंग. तो यहाँ पे इंडस्ट्री वाइज रुपीज इन करोड़ से वो GDP का डेटा है और परसेंटेज चेंज है प्रीवियस ईयर क्वार्टर 2 का और प्रेजेंट ईयर का क्वार्टर 2. तो दोनों का कंपैरिजन दिया है. यहाँ पे सेक्टर से आप बस गो थ्रू करना. ये थोड़ा ओल्ड डेटा है तो पॉसिबिलिटी इसके बेस पे MCQ जानने का कम है. सिर्फ मैं एक फास्ट ओवरव्यू करवा रहा हूँ. यहाँ पे इंडस्ट्रीज है एग्री फॉरेस्ट एंड फिशिंग माइनिंग एंड क्वेरिंग मैन्युफैक्चरिंग इलेक्ट्रिसिटी गैस एंड वाटर सप्लाई कंस्ट्रक्शन ट्रेड होटल्स ट्रांसपोर्ट एंड कम्युनिकेशन फाइनेंसिंग इंश्योरेंस रियल एस्टेट एंड बिजनेस सर्विसेज कम्युनिटी सोशल एंड पर्सनल सर्विस. तो इसका पूरा टोटल है GDP एट फैक्टर कॉस्ट. सिमिलरली है और इसका कंपैरिजन दिया है दोनों का. कुछ पॉजिटिव चेंज है कुछ नेगेटिव चेंज है और ये ओवरऑल चेंज है. फिर आते हैं फैक्टर कॉस्ट वर्सेस ये डिफरेंस है फैक्टर कॉस्ट वर्सेस बेसिक प्राइस वर्सेस मार्केट प्राइस. एट दिस स्टेज we need to clearly understand the difference between the concepts market price and factor cost as well as the basic price. So GDP at basic price excludes any taxes on products or the producer receives from the purchaser and passes on the government. Example GST or sales tax or service tax. Both includes any subsidies that producer receives from the government and uses to lower the price. मतलब सब्सिडी कुछ बेनिफिट गवर्नमेंट कुछ पार्ट ऑफ मान लो कुछ प्रोडक्ट बना रहे हैं तो उसका कॉस्ट बहुत हाई जा रहा है और उसका अल्टीमेट बर्डन कंज्यूमर पे आने वाला है जो हम खरीदने वाले हैं. तो गवर्नमेंट जो मैन्युफैक्चरर को मोटिवेट करने के लिए कुछ सब्सिडी देता है. मान लो एक चीज़ मैंने बनाया ये पेन बनाया जो कि 100 रुपीज़ का है पर जब मैं मार्केट में सेल करूँगा मेरा प्रॉफिट मार्जिन ऐड करके 120 को तो मान लो जो एंड कंज्यूमर है उसके लिए महंगा हो जाएगा. तो इसीलिए गवर्नमेंट बोलता है कि आप ये 100 में ही बेचिए जो आपका 20 रुपीज़ या 20% जो मार्जिन है वो हम बेयर करेंगे. तो गवर्नमेंट 20 रुपीज़ देता है और अल्टीमेटली मेरा जो कॉस्ट ऑफ प्रोडक्शन है वो जो पहले 100 था वो 80 हो जाता है. तो 80 कॉस्ट ऑफ प्रोडक्शन 20 मेरा मार्जिन तो मैं 100 में बेच पाऊँगा. जो 20 गवर्नमेंट ने दिया है उसको हम सब्सिडी बोलते हैं. So in simple terms, the basic price is the subsidy price without tax. So basic price equals to factor price plus production taxes less production subsidies. So relationship between factor cost and basic price. Factor cost plus production tax less production subsidies equals to basic price. So relationship between basic price and market price. Basic price plus product tax less product subsidies equals to market price. फिर वहाँ पे एंड में लिखा है नोट thus market price includes both product tax as well as production tax while excluding both product and production subsidies. मतलब ये जो टैक्स लग रहे हैं प्रोडक्ट के बेसिस पे या फिर प्रोडक्शन रिलेटेड वो दोनों ऐड होता है और सब्सिडीज लेस होता है. बस इतना ध्यान में रखो. फिर आते हैं नेट डोमेस्टिक प्रोडक्ट एट फैक्टर कॉस्ट एनडीपी एट एफसी. So net domestic product at factor cost NDP at FC is defined as the total factor income by the factors of production. Factors of production I hope आपको पता है, नहीं तो वो भी डिस्कस कर लेंगे. So in other words, it's the sum of domestic factor incomes or domestic income net of depreciation. So as mentioned above, market price includes indirect taxes imposed by government. We have to deduct indirect taxes and add the subsidies in order to calculate that part of domestic product which actually accrues to the factors of production. So सिर्फ यहाँ पे indirect tax की बात हो रही है. Indirect tax यानी GST. एक मिनट वो भी लिख पा रहा हूँ यहाँ पे. GST excise ये these are part of indirect taxes. तो साथ में भी हमको फॉर्मूला है the measure that we obtain so called as net domestic product at factor cost. So NDP at FC equals to NDP at market price less indirect taxes, net indirect taxes. और ऊपर वाला ये फॉर्मूला को इन्होंने रिपीट किया है तो उसका आगे वेरिएशन है compensation of employee plus operating surplus plus mixed income of self employed. यहाँ पे कुछ तो मिसिंग है, क्या है ज़रूर कमेंट करना. फिर आते हैं नेट नेशनल प्रोडक्ट एट फैक्ट्री कॉस्ट NNP एट FC और नेशनल इनकम. सो नेशनल इनकम इज डिफाइंड एज द फैक्टर इनकम accruing to the normal residents of the country during a year. It is the sum total of domestic factor income and net factor income from abroad. In other words, national income is the value of factor income generated within the country plus factor income from abroad in accounting year. So NNP at FC equals to national income equals to FID factor income earned in domestic territory plus NFI. If NFI is positive, then national income will be greater than domestic factor income. फिर आते हैं पर कैपिटा इनकम. ये बहुत बार आपने सुना होगा न्यूज़ में बहुत बार मेंशन होता है पर कैपिटा इनकम. तो क्या है ये? सो द GDP पर कैपिटा इज अ मेजर ऑफ अ कंट्रीज इकोनॉमिक आउटपुट पर पर्सन. तो यहाँ पे तो GDP डिवाइड बाय total population. So it is obtained by dividing the country's GDP adjusted by inflation adjust होता है यहाँ पे by the total population. It serves as an indicator for standard of living. ये important part है, could be a part for MCQ. फिर आते हैं personal income. So while national income is earned by factors of production, personal income is the income received by household sector, including not profit or institutions serving households. Thus, national income is a measure of income earned and personal income is a measure of actual current income receipt of persons from all source. सभी सोर्स का जो इनकम आता है वो हाउसहोल्ड इनकम का पर्सनल इनकम which may or may not be earned from productive activities during a given period of time. Example of this include transfer payments such as social security benefits, unemployment compensations, welfare schemes, welfare payments, etc. Individuals also contribute income which they do not receive. But for example, undistributed corporate profits, and the contribution of employees to social security. पर्सनल इनकम एक्सक्लूड्स रिटेन अर्निंग, जो रिटेन करके रखा है, इनडायरेक्ट बिजनेस टैक्सेस, कॉर्पोरेट इनकम्स टैक्सेस एंड कंट्रीब्यूशन टुवर्ड सोशल इनकम. ये देखिए, इस पर भी एमसीक्यू आ सकता है ट्विस्ट करके. पर्सनल इनकम में क्या इंक्लूड एक्सक्लूड होता है, मतलब जो इंक्लूड नहीं होता है. फिर आते हैं हाउस होल्ड रिसीव्स इंटरेस्ट पेमेंट फ्रॉम द फर्म्स एंड गवर्नमेंट. दे आल्सो मेक इंटरेस्ट पेमेंट टू फर्म्स एंड गवर्नमेंट्स. As such, the net interest paid by households to firms and government is also deducted from national income. Personal income forms the basis of consumption expenditure and is derived from national income as follows. So PI, it's for personal income, equals to NI plus income received but not earned less income earned but not received. So उसी को और थोड़ा एक्सप्लेन किया है. NI less अनडिस्ट्रीब्यूटेड प्रॉफिट, जो डिस्ट्रीब्यूट नहीं हुआ है, लेस नेट इंटरेस्ट पेमेंट्स मेड बाय हाउस होल्ड. नेट में जो ग्रॉस में कुछ आ रहा है कुछ जा रहा है, तो उसमें जो नेट बेसिस पे वो हम लेस करेंगे. लेस कॉर्पोरेट टैक्स एंड ऐड ट्रांसफर पेमेंट्स टू द हाउस होल्ड्स फ्रॉम फर्म्स एंड गवर्नमेंट. जो पेमेंट हाउस होल्ड के लिए किया गया है उसको हम ऐड करेंगे. An important point to remember is the national income is not the sum of personal income, because personal income includes transfer payments, example pensions, which are excluded from national income. Pension को हम exclude करते हैं. Further, not all national income accrues to individual as their personal income, क्योंकि सभी पेमेंट हम इंडिविजुअल को ही करते हैं, ऐसा नहीं है. फिर आते हैं, ये भी वन ऑफ द इम्पोर्टेंट पार्ट है, डिस्पोजेबल पर्सनल इनकम, DI. So disposable personal income is a measure of the amount of the money in the hands of the individual that is available for their consumption or savings. Disposable personal income derived from personal income by subtracting the direct taxes paid by individuals and compulsory payment made to the government. So simply DI equals to personal income less personal income tax और फिर लेस नॉन टैक्स पेमेंट्स. सो इस पे कुछ कैलकुलेशन भी हो सकता है इन द एग्जाम. फिर आते हैं apart from the aggregates, a few other aggregates are reportable in India. This reflects the amount of goods and service the domestic economy has at its disposal. So two more concepts needs to be understood. Namely, first, net national disposable income, NNDI. So net national disposable income, NNDI equals to net national income जो अभी हमने ऊपर देखा, plus other net current transfers फ्रॉम द रेस्ट ऑफ द वर्ल्ड, बाहर से रिसिप्ट्स लेस पेमेंट. ये नेट मतलब याद रखना. उसी का और वापस नेट NNDI इक्वल्स टू NNI प्लस नेट टैक्सेस ऑन इनकम एंड वेल्थ रिसीवेबल फ्रॉम अब्रॉड प्लस नेट सोशल कॉन्ट्रीब्यूशंस एंड बेनिफिट रिसीवेबल फ्रॉम अब्रॉड. ये अलग है वो अलग है, याद रखना. सोशल कॉन्ट्रीब्यूशंस और बेनिफिट जो रिसीवेबल है और जो भी इनकम और वेल्थ रिसीवेबल अब्रॉड से टैक्सेस. वापस NNDI प्लस जो नेट टैक्सेस है इनकम और वेल्थ रिसीवेबल फ्रॉम अब्रॉड से, और प्लस नेट सोशल कॉन्ट्रीब्यूशंस एंड बेनिफिट्स जो भी अब्रॉड से रिसीवेबल है. नेट मतलब रिसीट माइनस पेमेंट. फिर आता है ग्रॉस नेशनल डोमेस्टिक इनकम, GNDI. सो GNDI इक्वल्स टू NNDI जो ऊपर देखा प्लस CFC, उसी को इक्वल्स टू किया इक्वल्स टू GNI प्लस अदर नेट करंट ट्रांसफर्स फ्रॉम द रेस्ट ऑफ द वर्ल्ड. ये वाला कौन सा है देखो, याद रखो, रिसीट्स माइनस पेमेंट. सो अदर करंट ट्रांसफर्स रिफर्स टू करंट ट्रांसफर्स अदर देन प्राइमरी इनकम. फॉर अ डिटेल्ड एक्सप्लेनेशन ऑफ दिस कंसेप्ट्स प्लीज रेफर ग्लोसरी ऑफ मेन टर्म्स. ठीक है, देख लेंगे. फिर आते हैं डोमेस्टिक इनकम में भी कैटेगराइज इनटू, फर्स्ट income from domestic product accruing to the public sector, which includes income from property and entrepreneurship accruing to government administration department and saving of non-department enterprise. Second आता है income from domestic product accruing to private sector equals to NDP at FC less income from property and entrepreneurship accruing to government administrative departments saving of non-departmental enterprise. फिर आते हैं प्राइवेट इनकम. प्राइवेट, सो प्राइवेट इनकम इज अ मेजर of the income, both factor income or transfer income, which accrues to private sector from all sources within and outside पूरा बाहर out of India भी और within India भी. So private income equals to factor income from net domestic product accruing to the private sector plus net factor income from abroad plus national debt interest plus current transfer from government plus अदर नेट ट्रांसफर फ्रॉम द वर्ल्ड. सो ये ब्रॉड थोड़ा ब्रॉड वाला फॉर्मूला है, इसी को एक बार देख लेना एग्जाम के पहले. साथ में हमारे पास अभी कुछ न्यूमेरिकल्स है, सो मैं फर्स्ट गो थ्रू करूँगा. ये तो क्योंकि सिंस बेसिक कैलकुलेशन से इसमें एक्सप्लेनेशन की ज़्यादा ज़रूरत नहीं है. सो बेसिक डेटा दिया है. फ्रॉम द फॉलोइंग डेटा कैलकुलेट NNP at FC, NNP at MP, GNP at MP एंड GDP at MP. सो सब डेटा है. ऑपरेटिंग सरप्लस है, मिक्स्ड इनकम ऑफ सेल्फ एम्प्लॉयड है, रेंट है, प्रॉफिट है, नेट इंडायरेक्ट टैक्सेस है, कंजम्पशन ऑफ फिक्स कैपिटल है, नेट फैक्टर इनकम फ्रॉम अब्रॉड है और कंपनसेशन ऑफ टू एम्प्लॉयज़ है. ये रुपीज़ इन करोड़ दिया है. सो पहला फॉर्मूला है GDP एट MP इक्वल्स टू कंपनसेशन ऑफ एम्प्लॉयज़ प्लस मिक्स्ड इनकम ऑफ सेल्फ एम्प्लॉयड प्लस ऑपरेटिंग सरप्लस प्लस डेप्रिसिएशन और प्लस नेट इंडायरेक्ट टैक्सेस. उसी को उन्होंने किया है. सिमिलरली और तीन फार्मूला है. GNP एट MP इक्वल्स टू GDP एट MP प्लस NFI. तीसरा है NNP एट MP इक्वल्स टू GDP एट MP. एक को एक लिंक है. GDP एट MP कुछ तो गड़बड़ है, इसको लेस कर लो. पर्सनल कंजम्पशन और फिक्स एसेट. और लास्ट है, ये थोड़ा ट्विस्ट लग रहा है, NNP एट FC और NI इक्वल्स टू NNP एट MP लेस NIT. होप आप देख लेंगे. फिर सिमिलरली और एक क्वेश्चन है. फ्रॉम द फॉलोइंग डेटा एस्टिमेट नेशनल इनकम एंड पर्सनल इनकम. सो हमारे पास डेटा है नेट नेशनल प्रोडक्ट एट मार्केट प्राइस, इनकम फ्रॉम प्रॉपर्टी एंड एंटरप्रेन्योरशिप अकॉर्डिंग टू गवर्नमेंट एडमिनिस्ट्रेटिव डिपार्टमेंट्स, indirect taxes, subsidies, saving of non-departmental enterprise, interest on national debt, current transfers from government, from rest of the world, savings to private sector, corporate profit tax. तो बस फॉर्मूला देख लेना और कैलकुलेशन एक बार समझ लेना. नेशनल इनकम इक्वल्स टू नेट नेशनल इनकम एट मार्केट प्राइस लेस सब्सिडी लेस टैक्सेस प्लस सब्सिडीज. ये आगे पीछे भी कर सकते, कोई प्रॉब्लम नहीं. फिर है पर्सनल इनकम इक्वल्स टू नेशनल इनकम लेस इनकम फ्रॉम प्रॉपर्टी एंड एंटरप्रेन्योरशिप टू गवर्नमेंट एडमिनिस्ट्रेशन लेस नॉन डिपार्टमेंटल एंटरप्राइज, एड नेशनल डेट इंटरेस्ट, एड करंट ट्रांसफर फ्रॉम गवर्नमेंट, एड एब्रॉड, दोनों भी ट्रांसफर ऐड कर लिया, लेस सेविंग्स ऑफ प्राइवेट कॉर्पोरेट और लेस कॉर्पोरेट टैक्स. वो आता है 1711 करोड़. और एक कैलकुलेशन है. कैलकुलेट द एग्रीगेट वैल्यू ऑफ डेप्रिसिएशन when GDP at market price of a country in a particular rate was 1100 crores, net factor from abroad was 100 crores and the value of indirect taxes and subsidies was 150 crores and national income was 850 crores. So GDP at MP equals to वो सब डेटा दिया है. तो दोनों फॉर्मूला में पुट करके पहले क्या निकाला, GDP at FC निकाला, फिर GNP at FC उसका फॉर्मूला है GDP at FC प्लस NFI है, उसके बेसिस पे निकाला. फिर उसमें डिप्रिसिएशन की वैल्यू पुटअप करी. NNP at FC में हमको लगता है GNP लेस डिप्रिसिएशन, तो हमारे पास ये वाला वैल्यू है और GNP है जो अभी निकाला है, तो उससे डिप्रिसिएशन की वैल्यू आएगा, वो है 200 करोड़. इसका कुछ शॉर्टकट जस्ट मेरे को चेक करने दो. नहीं तो मैं कुछ जुगाड़ दिया था आपको. 850, 900, 1000. दिस प्लस दिस माइनस दिस हो सकता है, पर ऐसा कुछ नहीं है. फिर आते हैं और एक क्वेश्चन सिमिलरली, आप देख लेना. ऑन द बेसिस ऑफ इन्फॉर्मेशन कैलकुलेट NNP एट मार्केट प्राइस एंड डिस्पोजेबल पर्सनल इनकम. सो सब डेटा दिया है, मैं बस फॉर्मूला को थ्रू कराता हूँ. NNP एट MP इक्वल्स टू NNP एट फैक्टर कॉस्ट, ये मार्केट प्राइस है, ये फैक्टर कॉस्ट है, प्लस इंडायरेक्ट टैक्सेस लेस सब्सिडीज, where NNP at factor cost equals to NDP plus NFI. Similarly, disposable personal income equals to पूरा इनकम लेस पर्सनल टैक्स, खत्म. फिर आते हैं 1.4 मेजरमेंट ऑफ नेशनल इनकम इन इंडिया. सो द सर्कुलर फ्लो ऑफ इनकम, circular goal. Circular flow of income refers to the continuous circulation of production, income generation and expenditure involving different sectors of the economy. There are three different interlinked phases in the circular flow of economy, namely production, distribution, and disposition, that can be seen in the following figure. First, production of goods and service. Second, disposition or consumption income. Third, distribution as factor incomes, rent, wages, interest, profits. So in the production phase, firms produce goods and services with the help of factors of production. Second, in the income or distribution phase, the flow of factor income in the form of rent, wages, interest, and profits from firms to the household occurs. Third, in the expenditure or disposable phase, the income received by different factors of production is spent on consumption goods and services and investment. This expenditure leads to further production of goods and services and sustain a circular flow. These processes of production, distribution, and disposition keeps on going on simultaneously and enable us to look at national income from three different angles, namely as a flow of production or value added, dusra as a flow of income, and as a flow of expenditure, income, expenditure, value added. Each of these different way of looking at national income suggests a different method of calculation and requires a different set of data. The detail in respect of what is measured and what data are required at the three methods mentioned above are given in the following table. So ये टेबल में हमको तीनों मेथड के बारे में कुछ दिया है. So data requirements and outcomes for different methods of national income calculation. Method, data required और what is measured, क्या measured होता है. Phase of output, value added method, product method, ये ज़्यादा पॉपुलर है. So the sum of net values added by all the producing enterprise in the country. So हमको क्या required है उसके लिए, contribution of production units, क्या contribute हो रहा है production units को लगेगा. दूसरा है phases of income increment. वैसा तो तीनों भी important है पर mostly expenditure method भी होता है. Just a minute. तो यहाँ पे रिक्वायर्ड है टोटल फैक्टर इनकम जनरेटेड इन द प्रोडक्शन ऑफ गुड्स एंड सर्विसेज. यहाँ पे क्या क्या लगेगा हमको, रिलेटिव कंट्रीब्यूशन ऑफ फैक्टर्स वन, रिलेटिव. तीसरा है फेजेस ऑफ डिस्पोजिशन, सो एक्सपेंडिचर मेथड. यहाँ पे हमको लगता है सम ऑफ एक्सपेंडिचर ऑफ द थ्री स्पेंडिंग यूनिट्स इन द इकोनॉमी, नेमली गवर्नमेंट का स्पेंडिंग, कंज्यूमर का स्पेंडिंग और प्रोड्यूसिंग एंटरप्राइज का. व्हाट इज मेजर्ड, यहाँ पे क्या मेजर्ड होता है, फ्लो ऑफ कंजम्पशन एंड इन्वेस्टमेंट एक्सपेंडिचर. So corresponding to three phases, there are three methods of measuring national income. They are value added method, also known as product method, income method और expenditure. ये तीन मेथड है कैलकुलेशन के नेशनल इनकम के. तो हम एक बार एक देखेंगे. Now comes value added method or product method. So national income by value added method is the sum total of net value added at FC, that is factor cost, across all producing units of the economy. So the value added method measures the contribution of each producing enterprise in the domestic territory of the country in an accounting year and entitles consolidation, means combining all the data of production of each industry less intermediate purchase from all other entities. Intermediate means one industry produce that another industry use as a raw material. So this is intermediate purchase. So we have to reduce that. This method of measurement shows the unduplicated contribution by each industry to the total output. This method involves the following steps. Step 1, identifying the producing enterprise and classifying them into different sectors according to the nature of their activities. All the producing enterprise are broadly classified into three main sectors, namely first is primary sector, then comes secondary sector, and third one tertiary sector or service sector. These sectors are further divided into subsectors and each subsector is further divided into commodity group or service group. Step 2, estimating the gross value added GVA at market price by each producing enterprise. This is same as GDP at market price. This is GDP, that is GVA, gross value added. The formula here is gross value added at market price equals to value of output less intermediate consumption, as mentioned earlier. That is sales plus change in closing stock less intermediate consumption. Then we have a note for that. Note that imports are included in the value of intermediate consumption if total purchase are given. If domestic purchase are specifically mentioned, then imports shall also be added. So this is for the question mark type. Kindly go through once again. Also, sales include exports if domestic sales are separately mentioned. Export needs to be added. Means there if domestic are separately mentioned and exports are, then we need to combine both. If it's a total sale, that means it includes domestic as well as export one. Then comes step 3, estimation of national income. So for each individual unit, net value added is found out. Here, summation of gross value added at market price less depreciation equals to net value added at market price. By adding net value added or net products of the all subsectors of a sector, we get the value added or net product of that specific sector. For the economy as a whole, we add the net product contributed by each sector to get net domestic product. We subtract net indirect taxes and add net factor income from abroad NFII to get national income. Hope you are understanding it. Net value added NVA at market price less net indirect tax equals to net domestic product at FC. So net domestic product at FC plus NFI equals to national income NNP at FC. Then we have the values of the following items are also to be included. Kindly note. This is to be added. First, own account production of fixed asset by government, enterprises and household. Second, imputed value of production of goods for self-consumption. Still the goods are used for self-consumption, we can get a value, so we need to compute a imputed value. Third, imputed rent of owners occupied houses, means these are notional part, since we are not actually paying rent to ourselves nor we are selling goods to ourselves, so we have to calculate imputed value. And fourth, change in stock, that is called inventory. Then comes the second method or the next method, income method. So production is carried out by the combined efforts of all factors of production. The factors are paid factor income for the service rendered. Just a minute, I think the pen is not working. Yes. In other words, whatever is produced by a producing unit is distributed amongst the factors of production for their service. Under factor income method, or also called as factor payment method or distributed share method, kindly note there are 3 names for the one. National income is calculated by summation of factors of income paid out of the production, all production units within a domestic territory of a country, such as wages and salary, rent, interest and profit. By definition, it includes factor payments to both resident as well as non-resident people who are not residing into India but of Indian origin. Thus, NDP at FC equals to sum of factor income paid out by all production units within the domestic territory of a country. So again, we have a short formula for it. NNP at FC or national income equals to compensation of employees plus operating surplus, that is rent, interest or profit, plus mixed income of self-employed plus net factor income from abroad. Only income earned by owners of primary factors of production are included in national income. Thus, while wages of laborers will be included, pensions of retired workers will be excluded. Kindly note this from national income. Compensation of employees include, apart from wages and salaries, bonuses, dearness allowance DA, commission, employees contribution to provident fund and imputed value of compensation in kind. Non-labor income includes rent, that is actual and imputed, just we calculated for same employed one, royalty, interest on loans availed for productive services, dividends, undistributed profit of corporation before taxes and profit of unincorporated enterprise and of government enterprise. Here is a note. Interest paid by the government on public debt, interest on consumption loans, and interest paid on by one firm to another are also excluded. This is also an important one. Here, profit equals to corporate tax plus dividend earnings retained plus earnings. While using income method, capital gains, windfall profit, transfer incomes, and income from sale of second-hand goods and financial assets and payments out of past saving are not included. These to be excluded. This is also important one. However, commission, brokerage, and imputed value of service provided by owners of production units will be included. Kindly note there are 2 points. One is included, one this is excluded one. I will note here. Exclude, and this one include. Usually, it is difficult to separate labor income from capital income because in many instances people provide both labor and capital service. Such is the case with self-employed people like lawyers, engineers, traders, proprietors. In economics, where substance production and small commodity production is dominant, most of the income of people would be of mixed type. In sectors such as agriculture, trade, transport, etc., in underdeveloped countries, including India, it is difficult to differentiate between the labor element and the capital element of income of the people. In order to overcome this difficulty, a new category of income called a mixed income is introduced, which includes all those income which are difficult to separate. So, mixed income includes both labor part and capital part. Then we have the another method or third method, expenditure method. So in the expenditure approach, also called as income disposable approach, national income is the aggregate final expenditure in an economy during an accounting year. So GDP at market price equals to summation of final expenditure. In this approach to measuring GDP, which considers the demand side of the products, we add up the value of the goods and services purchased by each type of final user mentioned below. So here is the first one, final consumption expenditure. So private final consumption expenditure, PFCE. To measure this, the volume of final sales of goods and services to consumer households and non-profit institutions serving household acquires for consumption, not for use in production, are multiplied by market price and then summation is done. It also includes the value of primary products which are produced for own consumption by the household, payment of domestic services which one household renders to another, the net expenditure of foreign financial asset or net foreign investment. Land and residential building purchased or constructed by households are not part. Kindly note, this is not part. I am just marking it. They are included in gross capital formation. Thus, only expenditure on final goods and services produced in a period for which national income is to be measured and net foreign investment are included in expenditure method. So this method is little easier. Then the second part of this, government final consumption expenditure. Since the collective services provided by government such as defense, education, healthcare, etc. are not sold in the market, the only way they can be valued in money terms is by adding up the money spent by the government in the production of this service. This total expenditure is treated as consumption expenditure of the government. Government expenditure on pensions, scholarships, unemployment allowance should be excluded, kindly notice, because they are transfer payment. Then we have gross domestic capital formation. So gross domestic fixed capital formation, gross investment, is the part of a country's total expenditure which is not consumed but added to the nation's fixed tangible assets and stocks. It consists of the acquisition of fixed assets, and the accumulation of stocks. The stock accumulation is in the form of change in stock of raw material, fuels, finished goods, and semi-finished goods awaiting completion. So WIP goods. Thus, gross investment includes fixed expenditure on machinery and equipment and own account production of machinery and equipment, expenditure on construction, expenditure on changes in inventory, and expenditure on the acquisition of values such as jewelry and work of art. Then we have net exports. So net exports are the difference between exports and imports of a country during a accounting year. It can be positive or negative. So we arrive at national income or NNP at FC using this expenditure method. The formula is GDP at market price equal to C plus GDFC plus NX, that is next export. Yeah, then GNP at a market price equals to GDP at MP plus net export from NFI. Third, GNP at FC equals to GNP at market price less NIT. And lastly, NNP at FC equals to GNP at FC less depreciation. Ideally, all the three methods of national income computed should arrive at the same figure. When the national income of a country is measured separately using this method, we get a three-dimensional view of the economy. Each method of measuring GDP is subject to measurement errors, and each method provides a check on the accuracy of another method. By calculating total output in several different ways and then trying to resolve the differences, we will be able to arrive at more accurate measure. That would be possible. That would be possible with one method alone. That wouldn't be. It should be. Moreover, different ways of measuring output gives us different insights into the structure of the economy. So all the three are also important. Income method may be most suitable for developed economies where people properly file their income tax return. So majorly it could be a case of US. With the growing facility of the use of the cumulative law of method of estimating expenditures, an increased proportion of the national income is being estimated by expenditure method. जहाँ खर्चे बहुत हो रहे हैं वहाँ पे थोड़ा ईजियर है, लाइफस्टाइल हैबिट रहने दो, कंजप्शन हैबिट रहने दो, सब तरफ से. फिर as a matter of fact, countries like India are unable to estimate the national income as a whole by one method. Thus, in the agricultural sector, net value added method is estimated by production method. In the small scale sector, net value added is estimated by income method, and in construction sector, net value added is estimated. मतलब तीनों का मिक्स है इंडिया में. एग्री केस में प्रोडक्शन, स्मॉल स्केल सेक्टर में इनकम, और लास्टली कंस्ट्रक्शन सेक्टर में एक्सपेंडिचर मेथड. शॉर्ट फॉर्म से ऐसे स्मॉल स्केल सेक्टर, एग्री, कंस्ट्रक्शन, प्रोडक्शन इनकम मेथड, एक्सपेंडिचर मेथड. फिर एक शॉर्ट एग्जांपल मैं बस गो थ्रू कराऊंगा, आप शांति से बैठ के एक बार सॉल्व कर लेना. Calculate national income by value-added method with the help of following data: sales, opening stock, intermediate goods, closing stock, net factor income from abroad, depreciation, excise and subsidies. Here NFE at FC equals to GDP at market price less depreciation plus NFI less net indirect tax. तो ये बेसिक डेटा फिट करके हमको मिलेगा NI equals to 70 CR. Similarly, operating surplus, तो हमारे पास डेटा है सेल्स, कंजम्पशन ऑफ एम्प्लॉयज, इंटरमीडिएट कंजम्पशन, रेंट, इंटरेस्ट, नेट इंडायरेक्ट टैक्स, कंजम्पशन ऑफ फिक्स एसेट, मिक्स इनकम. सो जीडीपी एट मार्केट प्राइस इक्वल्स टू ग्रॉस वैल्यू आउटपुट एट मार्केट प्राइस लेस इंटरमीडिएट कंजम्पशन. तो जीवीओ इक्वल्स टू सेल्स प्लस चेंज इन स्टॉक लेस इंटरमीडिएट. तो ये फॉर्मूले से हमको मिलेगा जीवीओ एट मार्केट प्राइस. फिर सिमिलरली हम जीडीपी एट मार्केट प्राइस निकालेंगे, एनडीपी एट मार्केट प्राइस निकालेंगे, फिर एनडीपी एट फिक्स कॉस्ट निकालेंगे जो ये फॉर्मूला यूज़ करके, और लास्टली हमको मिलेगा ऑपरेटिंग सरप्लस जो है 1500 CR. सिंस लास्ट डे रिवीजन के हिसाब से वीडियो बना रहे तो मैं क्विकली गो थ्रू कर रहा हूँ, ज़्यादा डिटेल में डिस्कस नहीं कर रहा हूँ. इनकेस आपको लग रहा है कि कोई समझ नहीं आ रहा है तो आप कमेंट कीजिए, मैं एक सेपरेट शॉर्ट वीडियो उसके लिए बना के आपको प्रोवाइड करूँगा. फिर है कैलकुलेट नेशनल इनकम बाय वैल्यूएट मेथड, वैल्यू ऑफ आउटपुट इन प्राइमरी सेक्टर, इंटरमीडिएट कंजम्पशन, वैल्यू ऑफ आउटपुट इन सेकेंडरी सेक्टर, ये प्राइमरी याद रखना, इंटरमीडिएट फॉर सेकेंडरी, वैल्यू ऑफ टर्शियरी, इंटरमीडिएट ऑफ टर्शियरी, NFIA, नेट इनडायरेक्ट टैक्स, डेप्रिसिएशन, ये इंटरेस्टिंग है। तो यहाँ पे ये फॉर्मूला के हिसाब से एडलेस होगा और फाइनली हमको मिलेगा नेशनल इनकम, GDP आएगा 4800 प्लस एंड नेशनल इनकम इक्वल्स टू 4000 CR डिप्रिसिएशन लेस करके और एक्सपोर्ट का एडजस्टमेंट के बाद। फिर है नेट वैल्यू फैक्टर, नेट वैल्यू एडेड बाय FC यूजिंग फॉलोइंग डेटा, परचेज, सेल्स, डिप्रिसिएशन, ओपनिंग स्टॉक, क्लोजिंग स्टॉक, एक्साइज, इंटरमीडिएट कंजम्पशन, सब्सिडीज। उसी के हिसाब से सिमिलरली नेक्स्ट वाला है कैलकुलेट एन विद द हेल्प ऑफ एक्सपेंडिचर मेथड। सो तीनों मेथड के एक सम्स देख के जाना। सोशल सिक्योरिटी स्कीम की नया एडजस्टमेंट देख लेना। फिर है फ्रॉम द फॉलोइंग डेटा कैलकुलेट GDP एट FC, GDP एट मार्केट प्राइस, ये भी देख के जाना। GDP एट FC का फॉर्मूला यूज़ करके हमको आता है 6100 CR और मार्केट प्राइस को GDP एट FC प्लस नेट इनडायरेक्ट टैक्सेस जो आता है 6400 CR। फिर सिमिलरली एक है एक्सपेंडिचर मेथड से, यहाँ पे दिया है प्राइवेट फाइनल कंजम्पशन, नेट एक्सपोर्ट, पब्लिक फाइनेंस कंजम्पशन, GDP ने ग्रॉस डोमेस्टिक फिक्स कैपिटल, डिप्रिसिएशन, सब्सिडी, इनकम पेड टू अब्रॉड, चेंज इन स्टॉक और नेट एक्विजिशन ऑफ वैल्यूएबल्स, आप देख लेना। फिर आता है द सिस्टम ऑफ रीजनल अकाउंट्स इन इंडिया। Regional accounts provide an integrated database on the innumerable transactions taking place in the regional economy and helps decision making at the regional level. At present, practically all the states and UT of India compute state income estimates and district level estimates. State level or net state domestic product (NSDP) is a measure of monetary terms of the volume of all goods and services produced in the state within a given period of time, generally a year, accounted without duplication. Per capita state income is obtained by dividing the NSDP state income by the median projections of the state. The state level estimates are prepared by the state income units of the respective states Directorate of Economics and Statistics (DES). The CSO, Central Statistical Organization, assists the states in preparing these estimates by rendering advice on conceptual and methodological problems. In the preparation of state income estimates, certain activities such as railway, communication, banking and insurance, and central government administration that cuts across state borders, and thus their economic contribution cannot be assigned to one state directly, also known as supra-regional sectors of the economy. These estimates for these supra-regional activities are compiled for the economy as a whole and then allocated to the states based on the relevant indicators. फिर है GDP and welfare. So can the GDP of a country can be taken as an index to the welfare of the country? There are many reasons to dispute the validity of GDP as a measure of well-being. In fact, GDP measures our ability to obtain many requirements to make our life better, yet leave out many important aspects which ensure good quality life at all for all. GDP measures exclude the following which are critical for the overall well-being. Income distribution and therefore GDP per capita is a complete inadequate measure of welfare. Countries may have significant different income distributions and consequently different level of overall well-being for the same level of per capita income. Second, quality improvement in systems and processes due to technological as well as managerial innovations which reflect true growth in output year on year. Third, productions hidden from government authorities either because those engaged in it are evading taxes or because it is illegal, drugs, gambling, etc. Fourth, non-market productions with a few exceptions and non-economic contributions to well-being, for example, health of a country citizen, educational levels, political participation, or other social and political factors which may affect well-being levels. The disutility of loss of leisure time. We know that other things remaining the same, a country's GDP rises if the total hours of work increases. We have economic bads, for example, crime, pollution, traffic congestion, which makes us worse off. The volunteer work and services rendered without remuneration undertaken in the economy, even though such work can contribute to social well-being as much as paid work. Then, many things that contribute to our economic welfare, such as leisure time, fairness, gender equality, security of commodity fillings, etc. Both positive and negative externalities, which are external effects that do not form part of the market transaction. The distinction between production that makes us better off and production that only prevents us from being worse off. Example, defense expenditure such as police protection. Increased expenditure on police due to increase in crimes may increase GDP, but this expense only prevent us from being worse off. However, no reflection is made in national income of the negative impact of such higher crime rates. As another example, automobile accidents result in production of repairs, output of medical service, insurance and legal, all of which are production included in GDP, just as another way of production. Then we have limitations and challenges of national income competition. There are innumerable limitations and challenges in the competition of national income. The task is more complex in underdeveloped and developing countries. Following are the general dilemmas in measurement of national income. So there are many conceptual difficulties related to measurement which are difficult to resolve, such as lack of accurate definition of national income, accurate distinction between final goods and intermediate goods, issue of payment transfer, service of durable goods, difficulty of incorporating distribution of income, valuation of a new good at constant price, valuation of government service. Other challenges related to inadequacy of data and lack of reliability of available data, presence of non-monetary sector, production of self-consumption, this is a difficult one, absence of recording of income due to illiteracy and ignorance, lack of proper occupational classification and accurate estimation of consumption of fixed asset. So hope this video will add some benefit to your revision series. Thank you for watching. Keep learning, keep growing and keep rocking. Bye bye.